Hello and welcome back to Almus Market Morning, folks. This is Shikhar Garg, your host, and we bring to you the financial updates, global financial updates for you on daily basis. Now, as we talk about updates, we've seen the Indian 10-year benchmark yields rise past 7.5%, while even the US benchmark yields went above 3%. For the discussion purpose and what's happening around the markets, we have our money market pundit Pankaj Rathi coming in. Pankaj, what's going on? Why are the yields up? And there's also some bit of movement in the currency. What should we be expecting?
Hey, thanks, Shikhar. So almost now markets have started realizing that inflation is not going to go lower in a hurry. There are lots of chatters around that it probably has seen peak, but there is no evidence of it. And as FOMC and MPC are approaching, markets are readjusting themselves. We have seen 10-year yields moving above 750, which is almost a three years high. And there is a kind of on a pivot level, which is a 735 on 10-year Indian yields, which look like now is a base for 10-year yield till the time we get some sense of that we are peaking out of inflation and rates. That's on the India side. And US, yes, we have seen a grand 30 basis move in a 1 week. 10-year GSEC yield, which touched almost 270, has come back strongly before FMC and on the back of good data, non-farm payroll numbers and all those things. So yes, there's a push and pull action in the stock and bond market continued yesterday with the mixed views and news, where the non-farm payroll was a good number. Bond reacted on that and reached a 3.04 on a 10-year, whereas the US equities also took some kind of a positive action, thinking that markets economy is doing well, economy is not faltering as of now. There's a news of China restrictions which are easing also helped to the markets. Chinese market had risen over 1.5% earlier in the day, and Hang Seng Hong Kong index rose 4.6%, with some chances of removal of US tariffs. The rumors and the chances which looks like increasing. Coming back to, there were no such fresh data on Monday, but we look forward to international trade and consumer credit data today. Trade deficit for US, which had a dampening impact on the two estimates of the GDP, is expected to have shrunk to 89.5 billion in April from 109.8 billion in the previous month. We'll be watching that number. On the currency front, dollar regained some losses as investor reacted to rise in yields across the curve. Yen is weakening again. It has hit 20-year low at 132.03. So, which is basically yen is weakening, and which give us some sense that US yields have further space to go higher. The rise in US yields in rise in yields in US and Eurozone, even Australia, have triggered more of selling of a yen in carry trade. The fresh rise in oil prices also hit yen as Japan has started seeing a trade deficit. Rupee was held in a very tight range yesterday, but leaned towards weakness due to persistent demand, offset only by selling by PSU banks ahead of 77.70. Oil forming and sustaining above 120 and the large outflow from FIs continuing were adding to the negative sentiment on the rupee. In the offshore market, rupee traded as low as 77.82. As of now, it's expected to open around 77.75, and market will be seeing that the onshore in our market timing, dollar rupee has not gone above 77.80. If it goes above 77.80, there would be a lots of stop loss would be getting triggered. We will be seeing a MPC outcome tomorrow. As of now, market will be interpreting or basically speculating on that. We see that the 25 basis rate hike is fully discounted. I assume that it will be between 40 basis to 50 basis. 50 basis hike might trigger some short-term selling in USD INR. We will be watching, and if that happens, it should be taken an opportunity to buy a dollar. And it will be interesting to see if they hike the CRR again to further tighten liquidity. As of now, PSUs are making request RBI to not hike the CRR. That's all from me. Thanks a lot. Have a nice day.
Okay, so I see a couple of things that you mentioned earlier, Pankaj. A pivot level of 7.35% for the Indian 10-year benchmark yields. Now, let's see if we keep a close track onto it. While we've also seen yen hit the two-decade low. Quite a good, interesting update on the currency market front. So there's a lot of things happening around. We can also see oil being continued to be imported from Russia. I mean, in the month of May, we imported 12% of our requirement. So the market's still going on. The activities are still going on. There's still a lot of updates that we want to bring to you. So uh, continue to listen to us, and we'll bring as much as possible the latest updates for you. That's it for today. Thank you so much. We'll catch up again tomorrow.